Hello students, welcome to my channel Hans Commerce Tutorial for the lectures on commerce, accounts, finance and management. My suggestion to you, before watching the video, please go to the description below my video. You'll find a link there. Take a printout of the problems given in the link and keep it ready before watching the video so that you can be able to understand the problem, the solution and the explanation to get the maximum benefit from the lectures. Thank you. Hello students, welcome you back to the problems of acquisition of business. So hope you have watched the video on theory of acquisition of business. If you have not watched, please go back, see what is acquisition of business, what are the accounting entries to be passed on acquisition of business. So now we'll start the problems on acquisition of business, purchase of business by a company of the sole trader or partnership. Now, already hope everybody got the printout of all the problems from the link under my description. So hope that everybody is having the problem. I'm reading out the problem. See the problem carefully. First short question. Following is the balance sheet of Ram and Shyam, on the basis of which their business will be taken over by ABC Company Limited. The company is ABC. This ABC company is taking over the business of sole trader or partnership. The partnership belongs to Ram and Shyam. The balance sheet of Ram and Shyam partnership firm, it is given Ram's capital 80,000, Shyam's capital 60,000, Mrs. Ram's loan 35,000. Then sundry creditors 25,000, general reserve 20,000. Liabilities, assets, plant and machinery, land and building, stock, debtors, bank. This is the balance sheet of Ram and Shyam. The company pays 2,25,000 for the business. This is the purchase consideration which is agreed to be paid by the company to Ram and Shyam. And 2,25,000 for a business on account of purchase consideration, but does not take over Mrs. Ram's loan. So liability side will find two liabilities. One liability is Mrs. Ram's loan, another liability is sundry creditor. The company agrees to take only sundry creditors. The company does not want to take Mrs. Ram's loan account. That will be paid by partners themselves. That is not the botheration of the company. Now, calculate the amount of goodwill or capital reserve. In this problem, it is asking you simply to calculate whether there is goodwill or capital reserve paid by the company. Now see, when the goodwill will arise? Goodwill will arise when the company pays more than the net worth of the business of Ram and Shyam. अगर राम एंड श्याम का बिजनेस का वर्थ का मतलब एसेट्स माइनस लायबिलिटी, एसेट्स माइनस लायबिलिटी को नेटवर्थ कहेंगे. अगर नेटवर्थ से ज्यादा पेमेंट कर रहा पीसी, then there is a goodwill. Then there will be goodwill. Purchase consideration minus net worth is equal to goodwill. Suppose if the company pays less amount than the net worth of the business. Suppose the net worth of the business comes to 10 lakh rupees, but the company agreed to pay only 8 lakh rupees. The company is getting a profit. That is called capital reserve. That is called capital reserve. तो कंपनी कम पे कर रहा, पीसी अगर कम है तो कैपिटल रिजर्व, पीसी अगर ज्यादा है तो गुडविल. That's the point you have to remember. Now, see here. Calculation of goodwill or capital reserve. Assets taken over at agreed values. The plant and machinery 60, land and building, stock, debtors, bank. All the assets are taken over by the company. The total of the assets 2,20,000. Liabilities taken over at an agreed value, sundry creditors. Only one liability is taken over by the company, that is sundry creditors. 25,000. So 220 minus 25, 1,95,000 is the net worth of the business, value of the business. Partnership business का value जो है वो 1,95,000 है. But the purchase consideration agreed to be paid by the company is 2,25,000 purchase consideration. Now compare this purchase consideration with the net worth. We can see purchase consideration is more than net worth. So there is a goodwill. There is a goodwill. So goodwill is equal to purchase consideration minus net worth. 2,25,000 minus 1,95,000, 30,000 rupees. So 30,000 rupees is the goodwill which is paid by the company. That's it. This is the first problem. Now, second problem. X Limited purchased on 1st April 2004 the business of Sundar and Bharat Again, we have a partnership business, Sundar and Bharat. This partnership business is taken over or purchased by the company X Limited. The summarized balance sheet of the concern is given below. Capital Sundar 2,50,000, Bharat 2,80,000, sundry creditors 1 lakh. So only one outside liability, that is sundry creditor. Plant and machinery, investment, stock, debtors, bank. Now the assets are taken over at their book values except stock is taken at 1,10,000. ये पूरे assets जो है same book value पर ही लेगी company except one, that is stock. Stock का actual book value in the balance sheet it is given 1,20,000, but company has agreed that they will take over at 1,10,000 only. So we should take 1,10,000. And goodwill is valued 2 lakh rupees. Directly goodwill is also given in the problem, 2 lakh. And a provision of 5% is to be made against book debts. So the company says that debtors create a reserve for doubtful debts, provision for doubtful debts at 5% of debtors. The debtors are 60,000. The debtors given in the balance sheet is 60,000. So 5% of 60,000, 3,000. 3,000 rupees provision for doubtful debts to be created. The purchase consideration is satisfied by the issue of 40,000 shares of rupees 10 each, issued at rupees 15 each, and the balance in cash. Balance in cash. We don't know how much is the balance. So compulsorily we have to apply net assets method. We apply net assets method to find out the PC, and then only we can be able to get the balance in cash. Previous problem purchase consideration was given. Here PC is not given. We have to calculate PC because balance in cash is given. Pass journal entries in the books of X Limited. We are required to pass journal entries in the books of the company. But before passing the journal entry, we have to calculate the purchase consideration by net assets method. So here you can see calculation of purchase consideration by net assets method. Assets taken over at agreed values. So it is given in the problem. The company will take over all the assets at their book values except stock. So plant and machinery, जो book value है 2,50,000, same value, investment same value, stock in trade 1,10,000. In the balance sheet it is given 1,20,000. We should not take because the company has agreed to take at 1,10,000. Goodwill, the company wants to pay a goodwill of 2 lakh rupees. The company agreed to pay a goodwill of 2 lakh rupees. And debtors will be taken over at book value subject to a provision of 5% for doubtful debts. So it is given in the problem. The company wants to create a provision for doubtful debts of 5%. So 60,000 का 5% 3,000. So 3,000 subtract कर दो, 60,000 minus 3,000 you will get 57,000. Then bank balance 60,000. The total of the assets 8,17,000 is the agreed value of all assets taken over by the company. Minus liabilities taken over at agreed values. Only one liability is the sundry creditors. That is taken at 1 lakh. So 8,17,000 minus 1 lakh, 7,17,000 is the purchase consideration. We got it. First, we have calculated PC. Now settlement of PC. अब ये purchase consideration settle कैसा कर रही है company? It is given in the problem. The company wants to issue shares. 40,000 shares the company has agreed to issue. The face value of each share is 10 rupees. But the company has agreed to issue at 15 rupees, 5 rupees premium. 10 रुपये का शेयर कंपनी 15 रुपये में इश्यू कर रहा है. तो कितने शेयर्स? 40,000. तो 40,000 into 15, 6 lakh. So out of 7,17,000 total PC, 6 lakh rupees are settled by issuing shares and the balance in cash. So total 7,17,000 minus 6 lakh, the balancing figure you will get 1,17,000. Finished. So purchase consideration is settled in the form of shares to the extent of 6 lakh and cash to the extent of 1,17,000. That's all. This is all about purchase consideration calculation. Now it is asking you to pass the journal entries in the books of the company. A company with journal entries. First journal entry, business purchase account data to vendors account. Here the name of the vendor are Sundar and Bharat. The name of the vendors are Sundar and Bharat. So purchase consideration account data to Sundar and Bharat. 7,17,000. Narration यहाँ पर देंगे. Being the business purchased and PC due. Second entry will be the various assets taken over and the various liabilities taken over. So all the assets taken over at agreed values should be taken. Now, goodwill account, actually balancing figure I have written because normally we take the balancing figure, but here goodwill already is given in the problem. Goodwill amount 2 lakh. तो goodwill 2 lakh. यहाँ पर जितने भी assets debit करे हुए हैं सारे assets debit कर देंगे at agreed values. At their agreed values. तो PC calculation में जो values लिए हैं same values. 2 lakh, plant and machinery 2 lakh 50,000, investment 140, stock 1 lakh 10,000, debtors 60,000, bank balance 60,000. To sundry creditors, one more point. Debtors should be taken at book value, the gross value, before deducting provision for doubtful debts. Before deducting provision for doubtful debt, the debtors are 60,000. So we have to debit debtors at 60,000 only. Don't take 57,000. That 3,000 rupees provision for doubtful debts we should credit. We should take it on the credit side. So to sundry creditors 1 lakh, to provision for doubtful debts 3,000. 5% of 60,000. 3,000 provision for doubtful. To business purchase 7 lakh 17,000. Business purchase debited here, now credited here. Being the assets and liabilities taken over by the company at agreed values. So if you find the total 7 lakh plus 1 lakh, 8 lakh 20,000. 8 lakh 20,000 credit column. Again, if you add up all these things, you will get 8 lakh 20,000. That's it. Being the assets and liabilities taken over. Now, last entry will be settlement of PC or payment of PC to the vendors. The company will pay the purchase consideration to the vendor. Who are the vendor? Sundar and Bharat. So entry will be Sundar and Bharat account debtors 7 lakh 17,000. 2. Equity share capital. So how many shares are issued? 40,000 shares. And the face value of each share is 10 rupees. Face value is 10 rupees. So you should credit the share capital with the face value. So 40,000 into 10, 4 lakh. 4 लाख रुपये का फेस वैल्यू, लेकिन इश्यू करने के टाइम पे इट इज नॉट इश्यूड एट 10 रुपीज, इट वाज इश्यूड एट 15 रुपीज. तो 5 रुपीज वाज द प्रीमियम. तो दैट विल बी क्रेडिटेड टू सिक्योरिटी प्रीमियम अकाउंट. तो 40,000 into 5 rupees premium, it will come to 2 lakh. तो शेयर कैपिटल 6 lakh, सिक्योरिटी प्रीमियम 2 lakh. To bank 1 lakh 17,000. Remaining cash will be paid through bank. So to bank 1 lakh 17,000. Being the purchase consideration paid to the vendors. So see, when the Sundar and Bharat account is credited in the first entry, Sundar and Bharat account is debited in the third entry. Sundar and Bharat account is closed. So this is the end of the problem. Problem number 1. Problem number 2. So these two problems we have seen how the journal entries and how the PC will be calculated and how the journal entries will be passed in the books of the company. Students, previous video we have completed the two problems on acquisition of business, short problems. Now we are coming to the main problems. So the new viewers, if you have not watched the previous video, please go back to the theory video of acquisition of business. Be acquainted with the topic acquisition of business. Then come to the problems, and hope everybody have got the printed copy, hard copy of the problems from the link in the description. Now first main problem I am explaining you, I am reading out. Welcome Company Limited was formed to take over the running business of Dinesh, whose balance sheet was as follows. So sole trading business, Dinesh, he was the sole trader, owner of the business, and Dinesh business is taken over by the company Welcome Company Limited. The balance sheet of Dinesh is given sundry creditors 4,000, capital 80,000. Only one outside liability, sundry creditors. Land building, furniture, stock, debtors, bank. These are the assets. The purchase consideration was agreed at 1 lakh rupees. So PC is given, no need to calculate. Purchase consideration 1 lakh. Which was to be paid as 2,800 equity shares of 20 each. And 3,400 preference shares of rupees 10 each, and the balance in cash. Then the company also raised further capital by issuing 7,500 equity shares of 20 each for cash at par and 2000 preference shares of rupees 10 each for cash at par to public. So apart from the shares issued to the vendors, the company also issues the equity and preference shares to the public and raised the money. Past journal entries in the books of the company and also prepare its opening balance sheet after acquisition. Now see here, first of all, PC is given as 1 lakh. Purchase consideration 1 lakh given. Now how it is settled? PC is 28,000 equity shares of 20 each given in the problem. तो ये 1 लाख रुपये में 2,800 equity shares of 10 each. It comes to 56,000. 2,800 into 20. And 3,400 preference shares of rupees 10 each. So 34,000. And the balance in cash. So out of 1 lakh rupees, 56,000 equity shares, 34,000 preference shares. So minus कर दो 1 lakh minus 56,000 minus 34,000. So 10,000 rupees is the cash balance. So this is the settlement of PC. Now we'll come to the journal entries in the books of Welcome Company Limited. 3 entries we know. The first entry will be business purchased and PC due. So entry business purchase account data to Dinesh company. Dinesh account. He's a sole trader. So business purchase account data to Dinesh account 1 lakh. Being the business purchased and PC due. Second entry will be the assets and liabilities taken over. Right? For passing this second entry, we may get goodwill or we may get capital reserve. If credit side is more, then the balancing figure will be on the debit side, goodwill. If debit side is more, then the balancing figure you will get on the credit column, then capital reserve. कुछ भी आ सकता है. So first of all, we'll make a provision. Goodwill account data लिखकर छोड़ देंगे. We don't know whether we'll get the goodwill or not. If you are not getting the goodwill, we'll just put a dash. But right now, goodwill account data, we'll keep it blank. Imagine we don't have 20,000. Imagine, keep it blank. Then land and building 24,000, furniture 5,000, stock 39,000, debtors 9,000, bank balance 7,000. These are the assets of Dinesh taken over by the company. Liabilities to sundry creditors. Sundry creditors 4,000. Business purchase 1 lakh. This business purchase is credited. That's all. Now we have to see which side the amount is less. We can find here the credit column 1 lakh 4,000. The total is 1 lakh 4,000. And debit side it is less. Debit side it is less. So balancing figure will come on debit column. So goodwill account data balancing figure 1 lakh 4,000 minus all these debit items. Minus all the debit items, you'll get the balancing figure 20,000. Being the assets and liabilities taken over. This is the end. Now third entry will be PC paid. The purchase consideration paid to Dinesh. So Dinesh account data 1 lakh. To equity share capital 56,000. To preference share capital 34,000. To bank 10,000. Here PC is there. Being the PC paid. Now some 7,500 equity shares of rupees 20 each issued at par to the public. It is given in the problem. So apart from that shares issued to the vendors, the company also issues the shares to the public. 7,500 shares of rupees 20 each issued at par. So entry will be bank account data to equity share capital. 7,500 shares into 20, it will come to 1,50,000. Being 7,500 equity shares of rupees 20 each issued as fully paid up to the public and received the cash. Similarly, 2,000 preference shares of rupees 10 each issued at par to the public. The problem is here, last sentence. So 2,000 into 10, 20,000. Bank account data to preference share capital 20. Being 2,000 preference shares of rupees 10 each issued at par to the public and received the cash. Over. Journal entries are over. Now it is asking you to make the balance sheet also. Balance sheet of Welcome Limited. So in the balance sheet format, as usual, we are well acquainted with the format of the company balance sheet. So equity and liabilities, shareholders fund, share capital, reserves and surplus, non-current liability not there, current liability, trade payable. Now share capital, how we got this 2,60,000? We have to show the details in the notes. Note number 1, I'll give you the detail. regarding how we got this 2,60,000. Non-current liability, we don't have long-term debts, long-term borrowings. Current liability, we have only one current liability, that is trade creditor, that is trade payable. So how much? 4,000. So total is 2,64,000 on the liability side. Now come to asset side. On the asset side, non-current assets, that is fixed assets, tangible, intangible. First we take tangible assets. Tangible assets are two. Dinesh company में दो tangible assets है. That is land and building, furniture. Land and building 24,000, furniture 5,000. So 24,000 plus 5,000, 29,000. So here we have taken tangible assets 29,000. Similarly, intangible asset. Intangible asset is a goodwill. How much goodwill is debited here? 20,000. So goodwill 20,000. Intangible asset 20,000. Inventories. Inventories are the stock. Here you can see the stock account is debited by 39,000. So inventory is 39,000. Trade receivable. Trade receivable means debtors. How much are the debtors here? 9,000. So debtors I have taken. Trade receivable I have taken 9,000. Now cash and cash equivalent. How much is the cash after taking over the business of Dinesh? First of all, see here, how much cash has been taken over from the business of Dinesh? Bank account debtors 7,000. In दिनेश की बैलेंस शीट में 7,000 रुपीस बैंक बैलेंस था, वो बैंक बैलेंस टेकन ओवर बाय द कंपनी, तो वो 7,000 आ गए. अब उसके बाद बैंक अकाउंट को डेबिट करे 1,50,000, फिर बैंक को डेबिट करे 20,000. इश्यू ऑफ शेयर्स, इश्यू ऑफ इक्विटी शेयर्स, इश्यू ऑफ प्रेफरेंस शेयर्स. तो 9,000, here you can say 7,000, sorry, 7,000 plus 1,50,000 plus 20,000. Apart from that, purchase consideration he has paid, bank account 10,000. Bank account is credited by 10,000. So welcome company has received 7,000 rupees from Dinesh when it has taken over the business. Apart from that, 1,50,000 worth of equity shares and 20,000 worth of preference shares are issued to the public. तो पब्लिक के पास से पैसा आया 1,50,000 plus 20,000. Apart from that, 10,000 rupees are paid by Dinesh, by welcome company to Dinesh in the form of PC. So minus 10,000. 7,000 plus 1,50,000 plus 20,000 minus 10,000. 1,67,000 is the cash balance, cash and cash equivalent. Now, in note number 1, we have to show the share capital. Share capital. So share capital, equity share capital, first of all we'll take 10,300 equity share of rupees 20 each, fully called and paid up 2,06,000. How this 10,700 has come? 2,800 equity shares are issued. Here you can see 2,800 equity shares are issued to the vendors, Dinesh. Apart from that, 7,500 shares are issued to the public. 7,500 equity shares are issued to the public. So 2,800 plus 7,500. You will get 10,300 equity shares. Now in explanation, narration you can give out of this 10,300, 2,800 shares are issued for consideration other than cash. यानी 2,800 जो शेयर्स दिए दिनेश को दिए, कई के लिए दिया, उसका बिजनेस ले लिए, not on cash, other than cash. Then 2 lakhs ago. 5,400 preference shares of rupees 10 each fully paid. How we got 5,400? 3,400 preference shares are issued to Dinesh. Apart from that, 2,000 preference shares are issued to the public. So 3,400 plus 2,000, 5,400 preference shares. So 5,400 into 10, 54,000. Now narration of the above 3,400 shares are issued for consideration other than cash. ये 5,400, 5,400 में 3,400 shares are issued for consideration other than cash. Now take the total 2,06,000 plus 54,000. You will get 2,60,000. That 2,60,000 I have taken here in the balance sheet. And cash equivalent, just now we have seen. So this is the end of the first problem.